Welcome to the Commercial Real Estate Show, your source for insightful analysis and enlightening discussions. Hello, I'm Michael Bull. Thanks for being with us on one of the 47 radio stations. Maybe you are listening on iTunes or you're watching on YouTube or commercialrealestateshow.com. Well, we have a cool show for you today. I always look forward to this show. We're going to talk about the hotel industry, the hospitality industry. You know, the hospitality industry has had a great run for the last several years. They had some really tough times in that industry in the recession, but things have been going really well. Well, how's it going now? What should we expect in 2016? What should we expect moving forward for property level performance and for cap rates and sales volume? Well, we'll find out today. Please welcome my first guest. We have Mark Woodworth. He is president of PKF Hospitality Group Research, which is now PKF-CBRE Hotels. Thanks for joining us.
Yeah, thank you.
We also have Jack Corgel. He is professor of real estate at Cornell University, and he's also senior advisor with PKF-CBRE Hotels. Mark, thanks for joining us. I mean, you're Mark.
He's Jack. Right?
You're Jack. Thank
Nice to
you.
be with you, Michael.
Yeah. Well, I don't know Jack, I guess. All right.
You don't know Jack. That's good.
Well, Mark, get us started here. How has the hospitality industry performed in 2015? Is it still doing well?
Doing well, and just so you know, everything you said in the lead-in was perfectly correct.
Oh.
So you have done your homework as usual.
Fantastic.
So commend you for that. 15 was literally a record year for the U.S. lodging industry, specifically record in terms of overall occupancy level. The industry finished up, I think, Jack, it was north of approximately 66%, never been that high. And interesting enough that the expectation is, at least our current forecast for 2016, is we're going to see more of the same. Demand will once again grow at a faster rate than will supply. Therefore, that record occupancy level we realized in 15 is going to get even higher in 2016. From a longer range perspective, we think that's probably plateaued at that level, but we're going to stay and kind of hover. You know, persistence at the peak is one of the ways that we think of it. So the expectation not only for 2016 to be another terrific year for U.S. hotels, but we should likely see that at least for another year or two beyond that.
That's fantastic for the industry. So 66% occupancy, that's really a record for the...
Never been that high.
Wow,
right.
okay.
Yep.
What about average daily rates? Where are we on
That's an interesting part of the, in one sense, conundrum that we're seeing in this particular cycle, and that while demand, as you said, has been growing very, very nicely for 5-6 years now, since the end of the Great Recession, and supply growth has been below what one would expect given the level of demand increase. Where we haven't seen as much real growth is in pricing. In fact, it wasn't until the third quarter of 2015 that in real terms, prices, average daily room rates, had returned to their previous cyclical peak. So it was a very slow recovery in terms of operators' ability to get those price gains that one would expect given how strong those occupancy levels have been. And Jack, I don't know if you want to add some thoughts to that.
The good news here for real estate investors is the mix now between occupancy and ADR is decidedly in favor of ADR, which drops to the bottom line.
Much more profitable.
More efficiently and produces greater NOI growth. So as Mark indicated, we believe that there's more rate growth in these numbers, the occupancy numbers, and we'll see in 16 if that materializes.
Okay.
And we've had now 2015 represented the sixth year in a row, 6 years that we've had double-digit increases on the bottom line. I mean, as you know, it's all about profits and being able to take those revenues and deliver it.
That's what I hear.
There you go. So, well, we think it is. So
that's true in brokerage too, right?
Right.
That's true.
That's
yeah.
what I hear.
That's right. So, and we've never seen that. I mean, in fact, our firm has data going back to the mid-1930s, and the last time that we saw 6 years in a row, 6 consecutive years of bottom line NOI increases in double digits was in the late 1930s. So we're
I
literally.
didn't think you were that old. What are you, a
No,
grandpa?
we have a colleague, Robert Mandelbaum, who is that old, and he was there, and he swears by it. So, but anytime you see that kind of behavior that occurs literally once every 70, 80 years, you say, boy, these these are remarkable times that we're in, and they truly are. And I think, one of the messages, Michael, that we have been communicating some time to our clients is that realistically there are no threats to that. We have alternative scenarios in terms of what happens if the economy is a little stronger than what we think it's going to be. Conversely, what if it's a little bit weaker than the expected case scenario? But even under some of the downside scenarios, it still looks really, really good.
So the big room for improvement, I guess, occupancy is almost, I guess, considered almost full in the hotel industry now. So now they can raise the RevPAR, right? They can raise the rents on these spaces. So that's where your real upside is. So how long do you expect this to last? I mean, we're into 2016 now. How far can your crystal ball show us?
Sure.
Yeah, well, Jack, you want to speak to that?
Well, on the demand side, the models that we run are really for ADR and demand are driven by occupancy and real personal income. Real personal income is increasing at a very rapid rate now in relative terms historically, and is projected to increase at that rate of 3 to 4% going into 16. So as long as people have money to travel and they aren't afraid to travel, we're going to see continued increases in ADR with slight increases in occupancy.
So for the next 3 years, 5 years?
Well, we don't have occupancies declining until I believe it's late 2017. So we've got a very good run, but even then it's going to be because of principally two things. Supply growth is continuing to accelerate. Developers are figuring out a way to get deals done. And two, that there's that, as I think of it, there's that economics 101 concept of there's a relationship between demand and price. And as room rates continue to escalate, there is a natural negative response on the demand side. And so, for example, travelers that maybe have said, I was going to take a 3-day trip, the room rates are so high now, maybe I'll make it a 2-day trip, or a 2-day trip becomes one. If you're people like us that live in Atlanta, it's fairly easy to make a day trip, right? You get up extra early and get home a little bit later, but you've saved the price of a hotel room. We're in that part of the cycle where we're seeing more and more of that kind of behavior.
Yeah, and the cushion is pretty large. So even though we see a retreat to some degree of occupancy,
2 years out,
there's still a big cushion there before we even get to long run average.
Okay, so good times through 2017. What about the different types of hotels? Is this across the board for resort, full service, for everyone? What are you seeing there?
There's virtually, from a property type perspective, there really are no exceptions to that. I mean, there's some variation within that. When we look at it from a market perspective, certainly some markets are doing much better than others. You've got places like New York that have gone through an extraordinarily large amount of supply increase. You have markets like Houston that are getting the double whammy of lots of new hotel rooms, and with the energy pullback, decreases in demand. So you've got that kind of the worst scenario there, where you've got more rooms coming in but less people buying them. So that's something that we're watching very, very closely. But again, it's hard to come up with negative news or really threats to it, but we have some thoughts on that if you're interested.
Yes.
Okay.
We want both sides. Hey, what could happen that could
Well, and Jack, it's probably wrong for me to tee this next thing up this way, but we're getting lots of questions, and we have a lot of interest in Airbnb, the sharing economy. And just at a very high level, you say, well, they must be competitive with hotels. Consumers now readily understand that I have a new option that I can avail myself of. It's not just going to traditionalhotel.com to rent a room or to one of the online intermediaries, but now I can go to places like Airbnb or HomeAway and so on. I mean, the awareness of that option is growing exponentially. So so even though we just spent a few minutes talking about the record conditions in the U.S. lodging industry, on one hand, it's truly remarkable given we've seen the sharing economy, and specifically people like Airbnb, grow phenomenally during the last 3 or 4 years. So you'd say there must be no threat that's coming from there. But on the other hand, what we do hear from a lot of our clients is, we're paying attention to that. We're looking, and we want to know just what's out there, how competitive are they, what prices are they getting. So we're spending a lot of time and energy right now trying to get our arms around this new player in our traditional hotel space.
Yeah. Well, what's interesting, it seems like technology is disrupting a lot of industries. And I know my wife just the other day recently went to Athens to watch a UGA game, and she used Airbnb, stayed in a little apartment in a house, and just really loved it. Well, stay tuned. We're going to have more on the hospitality industry. We're going to talk about the investment market, talk about cap rates, and a lot more. Stay with us. I'm Michael Bull. This is the Commercial Real Estate Show. The Commercial Real Estate Show is brought to you by Bull Realty, a great place to do business. Xceligent, information for the professionals. And Commercial Search, properties for sale and lease. To access these companies or for additional videos, podcasts, and articles, visit CREshow.com.